Inflation has many Americans fearing the worst about the state of the economy.
But so far, rising inflation has not hit the job market in a major way. The latest report from the Labor Department shows initial jobless claims fell to 229,000 for the week ending June 18th. That is 2,000 fewer than the previous week.
CBS News Moneywatch reporter Irina Ivanova joins us now for more. Hi there, Irina. Great to see you in person. You know, there's so much to talk about here because I think a lot of Americans kind of get confused when you hear that the jobs market is good, that you hear the Biden administration touting unemployment numbers. But at the same time, Americans are facing these inflation pressures. We're seeing those prices at the pump and at the grocery store. Give us a sense of what the reality is here with the job market. How much of an indicator is that when it comes to the economy?
So you're absolutely right. It's a very confusing picture. Let's try to break these things down a little bit. The job market in most times is the most important sort of economic indicator for most people. It's, do you have a job? Can you get a job? Does it pay enough to sustain you and your family? And what we've seen in the past year and for the first part of this year is it's been an absolutely white-hot job market. That has started to cool down recently. So we've gone from creating 700,000 jobs a month at the start of the year to last month just under 400,000 jobs, and economists are expecting that this month we've created about 200 or 250,000 jobs. And the weekly layoff figures that you mentioned, they're still quite low, but they've actually gone up from hitting a 50-year low back in March. And those numbers are still very, very good. You know, creating 200,000 jobs a month is still very strong compared to pre-pandemic levels. But what we've also seen is that the job market has sort of been replaced by inflation. If you look at the polls, you know, that is now the #1 concern for most Americans. And it makes sense because we have inflation at 8.5%, and we've seen wages go up at just 5 to 6%, really, which means a lot of people's paychecks are really being eaten up by rising prices. And that's really the balancing game that politicians and that the Fed are now dealing with to try to just cool down the surging inflation and not derail the job market.
And speaking of, Irina, you brought up the Fed on Wednesday. Federal Reserve Chair Jerome Powell said a recession is a possibility. You know, it's interesting hearing him say that. So how would that affect the job market? I know, as you pointed out, that all of this is a crazy balancing act, right? You need to rise inflation to cool down the hot economy, but you don't want to cool it down too much. All this talk about a soft landing, right? Where does the job market fit into all of this?
That's right. Well, a recession is definitely a higher possibility than it was, just a few months ago. Most economists aren't expecting one this year. There's about a 40% chance, according to most estimates, that next year we'll see a recession, which, again, that means it's more likely that we won't have a recession than that we will. What does that mean for jobs? Jobs are actually one of the last things to change when the economy turns, just because it can be pretty complex to hire people and to fire people. Right. A lot of other things change first. We see things like consumer spending slowing down, business investment slowing down. But what we have seen in the past, really just the past month, is that as interest rates rise and as inflation continues to stay high, there are some specific parts of the job market that are really responding. So, for instance, we heard about the layoffs in a lot of booming tech companies. That's a sector that's very sensitive to high interest rates. It was boom, boom, boom when money was cheap, and now that interest rates are rising and economic growth is sort of a little more shaky, a lot of these fast-growing companies are sort of pulling back. And if we look at other sectors that are called, interest rate sensitive sectors, like manufacturing, like finance, we've also seen there either a slowdown or even a drop in hiring. Again, though, there's a lot of different things going on. It's not really accurate to talk about one job market because even as we're seeing layoffs in tech, we're seeing, a third of restaurants in a survey today said that they can't open at full capacity because they can't
don't have
find
enough
the
workers.
staff.
Yeah, I do find it reassuring what you said, though, that the labor market is the last to feel the effects of the recession, because if we do have a recession, which is a big if, as you pointed out, there seem to be indications that it will be short. So maybe there's a chance that the labor market will skip the effects of the recession altogether, right? And we did hear from our guest yesterday on Moneywatch that a lot of companies have, bolstered their bottom line enough.
They're bracing
that they could weather this without having to fire employees. If the big if we see a recession.
That would be the dream. To not fire anyone.
Right, exactly. Oh my gosh, Irina Ivanova, always a pleasure to have you with us. Thanks for coming by.
Thanks for having me.